I'm here with Joe Millward, founding partner of Epsilon Direct Lending. Welcome, Joe.
Hey, James.
Joe, in that mid-market direct lending space in which Epsilon operates, what did the pandemic do to that whole space?
Yeah, so the mid-market comprises large established businesses that are just critical to the day-to-day operation of our country. It employs a lot of people, generates a lot of GDP. As the pandemic hit, there was a rightful pause in the market as lenders and borrowers, companies evaluated the situation and understood the risks and understood what that meant to their future. I think after that initial pause, two things played out. Firstly, the banks focused heavily on existing customers that supported them, but that meant they didn't really have the capacity or the risk appetite to support companies that fared very well through the pandemic, businesses that weren't impacted, and there were a lot of them. And that meant that the non-bank lenders were able to really kind of step up and service quite a large portion of the market.
So in your sector now, that mid-market space, as we hopefully come out of or demonstrate that we're coming out of COVID, what's the appetite for credit like in that space now?
Yeah, it's huge. Everyone we talk to in the market, M&A advisors, people who are working on diligence, on buyouts and so on, they all say they've never been busier. Private equity firms never been busier. In the last 24 hours, I've had 5 phone calls from people that I've never met asking if we can help provide them with growth finance to support their aspirations, to support their business plans. And that's just kind of, that's unheard of. And a lot of them are very good kind of lending opportunities. So we're quite excited about the outlook right now.
On the other side of your operation, Joe, what role do you see credit playing in investor portfolios and that investor demand for what credit gives them?
Yep, income. There's not a lot of sources of quarterly consistent cash income in the market right now. Private credit, especially mid-market direct lending, offers that. The pandemic has proven that it's a low volatility, defensive product. A lot of the small corrections in pricing across the funds that we observe in the market return quickly to par. And so it's an income product, it's a defensive product, and we think investors really want and need that right now.
So overall, how do you see the credit market evolving in Australia? And do you see it following the path of the Northern Hemisphere where it's just much more established and understood and utilised?
Yeah, it's a good question. We definitely see it following the path that the offshore has taken, offshore markets have taken, US and Europe, large market shares held by the non-banks. But I think the thing that's often overlooked, they work in partnership and collaboration with banks. Banks are required for certain forms of debt capital, and there's a space for both in the market. So we see a strong sense of collaboration evolving in the Australian market as the banks provide, core working capital facilities, hedging facilities, and so on. And non-banks provide that more bespoke, more structured loans to help support, more complex growth purposes.
And of course, flowing through to income for investors.
Exactly.
Thanks very much, Joe.
Thanks, James.